Welcome to It's the Economy. Actually, we are continuing where Manisha left off. Today, we are discussing metals. Copper and aluminium prices have gone through the roof over the past 6 months, from lows of about $8,700 per ton for copper in April. Copper prices have jumped nearly 23% to over $10,800 today, while aluminium prices too have risen by about 25% from their April lows. As a result, metal stocks like Nalco, Hindalco, Tata Steel and JSW Steel as well have been big outperformers on a year-to-date basis. To understand where metal and steel prices are headed, we have with us Gregory Shearer, the head of base and precious metals research at JPMorgan. He's joining us all the way from London. So, Gregory, thank you very, very much indeed for joining us. Let me start first with aluminium prices, because there are significant Indian listed companies in this space. What's your guess? Are we going to continue to see aluminium prices ramped up in 2026 as well?
Yeah, so from our perspective, we see aluminum prices heading towards 3,000 by the first quarter of 26 and remaining quite elevated through the first half of 26. We're in a market here that in the very near term remains very balanced with supply risks. We have outages in Iceland. We have potential for significant capacity in Mozambique to go offline from March 2026. And Chinese capacity is still capped and running up against their 45 million ton cap. On top of that, and I'm sure we'll get to this, we remain quite bullish on copper and think that there's a magnetism higher from copper prices, which continue to pull aluminum up towards around 3,000 in the very near term as we look to the first half of 26. Now, broader speaking, we do think that Indonesian supply growth as we look to 26, 27 and beyond is very much the real deal. We have something approaching almost 1.5 million tons of additional Indonesian supply growth over the next 2 years. And that will begin to sort of undercut the market, but we don't think that's a story until later into 2026. And particularly, we think at prices close to 3,000, those Indonesian producers are going to be very well incentivized to bring on supply, but in the very near term, still looking like a very sort of tight balanced market, with particularly copper tipping the scale and pushing aluminum prices higher as well.
Okay, so aluminium higher because of copper. Actually, I did read your report, and I ought to have started with copper. It's just that there are more listed aluminium stocks and hence more viewer interest. But let me come to copper itself. What is the sense? Are you getting a sense that copper prices are also headed even higher?
Yeah, we actually think copper prices on the LME are headed towards 12,000 in the first quarter of 2026. What you see in copper is a market that we see two important dynamics. The first one being we're in a very dislocated inventory environment. The US has over-imported by over 600,000 metric tons. But at the moment, because of the potential for there to be a refined copper tariff on imports into the US later in 26 or in 27, US COMEX prices continue to stay above LME prices. And that has two important key dynamics. A, all of that copper that's been shipped to the US is essentially locked in the US until you see prices change. And B, the US continues to take near normalized around 60 KMT a month imports despite having significant levels. So what that's really done is drained inventory from the rest of the world, and Asia in particular. Then you enter significant disruptions, which has basically led to our forecast that we see in the fourth quarter already a significant refined deficit emerging. And then over the course of 2026, given the outages we see at Grasberg in particular, about a 300,000 metric ton deficit. So ultimately, what we really see is that this is quite a very bullish near-term setup. The Asian refined copper market, which is, feeling stress from both the US as well as Europe, getting very tight, and that the front of the curve, and particularly LME prices, we think are headed towards around 12,000 in early 2026, have much higher to go. The big risk right now, Chinese demand is a bit soft every time we test 11,000, but we ultimately think, look, these supply disruptions are not going away. And from that perspective, we do embed a bit of a weaker Chinese demand environment, but ultimately see us going towards a place where China is essentially going to have to almost stop into this, and that really much tighter dynamic of a market as we look to 2026 is quite influential to driving prices higher for copper.
Okay, so $12,000 in copper. Well, let me come to steel. We saw major disinflation in steel, with Indian steel makers actually demanding anti-dumping duty on steel coming into India. Any guesses on how Asian steel prices go from here on? Are we likely to continue to see steel disinflation in Asia?
Yeah, so from an India perspective as well, our equity analysts who are metals and mining equity analysts who cover the Indian steel market do still see through the March end quarter about a 3,000 rupee per ton increase in Indian steel HRC prices. Not only are they expecting post-monsoon to see a recovery on the demand side in terms of construction, we're also expecting a bit of a continued extension on the dynamics you were talking about, anti-dumping. The big risk here is that we are seeing still oversupplied levels coming out of China. That is, in our view, not going to drive a surge higher in steel prices. But ultimately, they're also not really embedding any significant sea change in terms of Chinese stimulus, which could change their sort of domestic S&D dynamic. And that remains one of the most bullish risks out there in terms of Asian steel prices.
Okay. Well, this anti-involution policy of the Chinese government, capping of steel output, wouldn't that make for, some definite level of bullishness?
Yeah, ultimately, it down the road it does, but there's still a decent amount of work to be done on the oversupply. So it's setting the groundwork, and this has been something that's kind of been a give and take throughout, many different, a few years here now. But as we look forward, it sets the groundwork, but we're still working through a bit of some oversupply in China.
Okay. Well, now let me come to the, reserving the best for the last, gold and silver. We did see a dip in gold prices, below the $4,000 mark, but it's come back strongly. What's the guess for gold up to the end of the year and early next year, early 2026?
For gold, in the very near term, what we've seen is we saw a pretty exceptional level of demand in the third quarter of 25. Just to put it into context, if we think notionally, it was almost $105 billion of demand across both central banks as well as investors, so inclusive ETFs, retail, bar and coin, as well as futures. To put that in context, that's almost 80% higher than what we've seen in the previous 4 quarters. So the market's digesting that now. We had a lot of ETF flows as prices ran up towards and above 4,000. What we think is that this correction is ultimately quite healthy, right? We need to digest that level of inflow. As we look to 2026, nothing has structurally changed in our view. We remain very bullish. We have a year-end 26 target of just a touch over $5,000 per ounce. What that looks like is we think, in the very near term, you're in sort of a level between 42, 43, and then you begin to move higher as we go into year end and early 2026. And what you do actually see is some pretty strong typical seasonality around year end and into the first few days of January. And we do think that could be kind of a catalyst here. So, to recap, near term, digesting some pretty impressive inflows on the demand side, particularly in terms of ETF growth. As we look to next year, still expecting central banks to be buying something around 760 tons. On top of that, expecting investors on ETFs to be adding something around 360 tons. When we add all that together, still very much a bullish trajectory, and expecting prices are, next stop is towards $5,000 per ounce.
Oh my God, $5,000. Well, can you just give me, for 2026, the average for gold and the approximate range?
So in terms of the average, what we're seeing is something that comes in roughly around 4,600 to 4,700 on average. And then from a silver perspective, ultimately, we do think that what you saw was a bit of an illiquid move higher with very exceptional Indian demand pre-Diwali, ETFs creating, and this worries about Section 232 critical minerals, keeping metal in New York. As we look towards 2026, we do still think you're headed towards a range that's something around 55, 56 by the end of 2026, but a little bit more orderly and following gold higher as we go deeper to next year.
Would you say silver will follow the same trajectory?
Yeah, we think ultimately that how we kind of think about that is in the gold to silver ratio, which we ultimately think is at fair value between an 85 to 90 ratio range. We dipped down towards 80. We think that was a bit of silver outperformance given some of the liquidity issues that we saw. Ultimately, we do think we're probably past that peak, really significantly backwardated London market, restoring a bit of free flow tons. And from that perspective, see it being a little bit more orderly of an increase as we look to 26.
Okay. All right. Let me end with a question that's designed more for your economists. For a better part of 2025, economists were telling us that Asia will be ridden with disinflation. But with this bullishness in some metal commodity prices, will Asian disinflation go away? It won't be that severe. Will Asia see any bit of inflation?
So, yeah, we have been seeing, and our economists have been tracking disinflation across Asia, particularly driven by, Chinese exports. We are beginning, it's quite interesting because they've been tracking recently a bit of a turn in Asian inflation. That's mainly so far been driven by food price inflation. Where we're actually still seeing trends of disinflation and that kind of continuing to move forward is in EM Africa, as well as sort of EM Edge Europe, where actually the disinflation that Asia had been feeling for most of this year is now kind of moving a little bit further abroad. We do think that there will be this sort of dynamic higher from a raw material price, particularly on the metal side. Yet we're still thinking, our oil strategists are still looking for prices sort of in the upper 50s to lower 60s for Brent. So we do think that is still relatively constrained, which keeps things relatively orderly.
Okay. Yes, there is, of course, crude is heading lower, or at least not able to break even $65. Thank you very much, Gregory. It was a pleasure having you with us and for a 360-degree perspective on all metals. Thanks a lot for joining us. We have to wrap up on Bazaar on that note. Chartbusters coming.